I often get asked, what is an investment vehicle I can use that not only reduces my federal income tax, but also can grow tax-free? If you guessed HSA, you're correct. And that's what we're going to talk about today, so stick around. Welcome back to the channel. My name is Ryan, and today we're discussing and designing your HSA, some do's and don'ts, and what you can use your HSA for. But let's back up a second. I admit I should have probably started contributing to my HSA sooner, but again, let's talk about what an HSA is before we actually start designing and researching. So an HSA, in a very simple term, is a tax-exempt savings account available only to people with a high deductible health insurance plan. The money can be used to pay for qualified medical expenses, and if the money is spent for anything else outside of that, the account holder has to pay an income tax on the withdrawal plus a 20% penalty. So it should be clear as mud, right? Wrong. So if that doesn't completely make sense, really an HSA is an investment vehicle you can use to pay for qualified medical expenses and reduce your taxable income and grow your wealth. Now, who's eligible? Well, that's a great question. Anyone with a high deductible health savings plan can open an HSA, and the two are usually paired together. So you'll be offered an HSA when you take out a qualifying qualifying plan. You must also meet certain eligibility, which I'll link down in the description. But enough about that. Let's start walking through some of the ways you can actually just get a health savings account set up, look at some of the calculators to grow your wealth, do a checkup tool, and then we're going to go through an asset allocation calculator. So one of the bigger HSA brokers is Optum Health. If you're not familiar with Optum Health, they're very big in the United States, and a lot of the Fortune 500 companies use them for their health savings accounts. On this page, and I'll link all these links down in the description, but on this case, if you go to the Optum website, you can actually figure out how much you can contribute to an HSA. It'll ask you certain things. So if we look here, select your coverage type. I'm going to pretend this is me going through this, but obviously you can change it as your situation depends upon. So I'll say I'm single, tax year 2022. Will I turn 55 or more this year? No. Will your employer or anyone else contribute to HSA? Yes. This is very important because one of the things that a lot of people miss out on, and I've had this conversation several times just this year, is a lot of employers will do a match on HSA contributions, or they'll give you an amount up front, or they'll spread it out throughout the year. Could be a combination of things. The point is, it's free money. Take it. I'm going to do a video before the end of the year on getting your 401k lined up for 2023, more free money. Why is that important? Well, you should always take free money, but second of all, from an HSA standpoint, you can use it on things like toothpaste, diapers, Q-tips, anything from a health perspective you can use. I've used my HSA for Band-Aids before. So very, very important. Let's say the employer here contributes $1,000. Well, that's $1,000 a year, assuming you put in, typically you put in $1,000, they'll put in $1,000, up to the $2,500 a year limit if your coverage plan is single. So I'll go ahead here and click my maximum contribution. In this case, for 2022, my maximum contribution with contributions from others would be $2,650. Now in this case, let's say I just plan to put in $2,000, and we'll say my contribution is bi-weekly. That's when I get paid. Let's say our federal tax rate is 20%. Obviously, change it, adjust it to your specific needs. And let's say I'm living in a state with no state income tax. I got lucky. I live in a state with no income tax. So now this tells me real quick, what is my bi-weekly contribution amount? So every 2 weeks, $76.92 will be taken from my check, and we won't be paying taxes on that. We'll draw that down from our taxable amount. The total HSA contribution is $3,000, getting $1,000 from my employer, so that's $2,000 plus $1,000 is $3,000. Federal tax savings for 2022 is $600, and of course I'm paying no state tax, so I receive no savings for that. And this is really great. This can help figure out your HSA future value. So how much will you contribute to your HSA each year? Let's say it's $2,000. Let's say how much will others? Let's say again it's $1,000. So I've got $3,000. how much will you withdraw each year from your HSA? Let's say I take out $250 a year for expenses. And this is great. So let's say I just started now. Let's say I have 30 years to contribute. And we're going to go through investment vehicles on this in just a minute. But if your average rate of return on your HSA, because you can invest in things like mutual funds and index funds, let's say it's 5%. Whoa, look at these numbers. So your total gross HSA contribution would be $90,000. You've got medical expenses of $7,500 over 30 years. But if you look here, you've got estimated earnings, $109,000 on your HSA contributions, tax savings right here. So you're saving $21,868.43 on taxes by contributing to your HSA. I want to say that again. You're saving $21,868.43 on your taxes by contributing to your HSA. It's a no-brainer. I mean, it really is. If you look here too, estimated tax savings on gross HSA contributions, $18,000. Again, plug in different numbers here. You know, take it for a stroll, see what you like to do. Maybe you've got a family, maybe you will be turning, you'll be 55 this year. That does change some things, but again, it's tax-free money from a federal standpoint, and it grows tax-free. So I think this is just an amazing investment vehicle that you can use to help pad and help offset either some taxes from a tax perspective each year, or use it to grow tax-free. Now, next we're going to look at the asset allocation calculator. So in this case, we'll say someone's 40, and this is just another tool in the Optum playbook here you can use. But you know, this one actually looks at your health. It looks at your age, your health. I just walked through this a few days ago with someone. Let's say your health is above average. How much do you expect to pay out of pocket for health care? Let's say $2,000. That's a normal deductible. Let's say my HSA balance is $5,000, and how much do I plan to contribute over the next year? Let's go with the $3,000, like we did in our previous example. Level of comfort with investment risk, average. How likely are you to sell all of your investments to pay for your medical expenses? Let's say likely. And this is great because it actually goes through and it shows you, much like we've looked at in some of my other videos, what it looks like from a breakdown perspective. So in this case, 37% is going to large cap equity. So think your blue chips, your S&P 500s, your Dows. Your mid cap, this would be your S&P 500. Small cap, NASDAQ, things like that. International, that could be bonds or equities. And then you've got fixed income here. So that's where you're getting a fixed rate of return on your capital. So again, you could go back here and make some changes if you'd like, but this is a really great way to see how you would break down your asset allocation once you hit that number to invest in. And once your account hits $2,100 in the United States, at least for 22, you're able to start making those investments. I do know people that have much more than $2,100 in their HSA, and they use it as a wonderful investment vehicle. Okay, so this last tool we're gonna go over to get you straight and get you on your way here is the health savings checkup tool. So in this case, this is more of an educational tool, but let's say we'll walk through this. So let's say we're gonna go with 40. I'm not retired. I'm gonna say I agree, and this again just walks you through some more key metrics. So let's say I'm 6'2", I weigh 220. Let's say I weigh 200 pounds. I don't smoke. Let's say I live in Arizona. I'm going to retire at 65, but I'm going to live to be 90. Now, a lot of people ask, how do I know how much I need? How much do I need in my HSA? How much do I need to retire on? How much do I need for costs? This tool right here breaks it down. So in this case, at 66, you're going to be out of pocket $2,880 for the entire year. And then as you see, your coverage from Medicare goes up. Your out of pocket goes up too, but you're going to be in a shortage in this case because you're not contributing enough, and you're in a state where you're paying state income tax. So if I switch this to a state that doesn't have state income tax, I'm guessing it's going to go down, Tennessee. So yeah, it just went down. Now, if I go next, it actually lets you pick out if you have pre-existing conditions. So in this case, let's say I've got osteoporosis. That's obviously going to up my cost because my expenses are going to be more. In this case, I'm going to say, do I have an HSA? Yes, it's individual. $5,000. Planned contribution, let's say $3,000 a year. Withdrawal would be $500. You get what I'm saying here. And we'll say the number 5%. Now this number is going to change. Okay, so now that we factored in contributing to it for another 25 years, we're $3,000 a year. We're taking out $500, but we're getting a 5% rate of return, which historically over the market is low. It averages about 9.5 to 10. So if I change this to even 9, you're going to see a massive difference in estimated returns. So you're going to get $127,000 paid from your HSA, your health savings account. A lot's going to be covered by Medicare. Your total health costs are only going to be close to $400,000, but you're going to have almost a $2 million surplus. So that's $2 million in surplus that has grown tax-free, that continues to grow tax-free, and is not subject to federal income tax while it's accumulating. So just an absolutely incredible investment vehicle. So in this case, I've updated everything. I can go back, but just absolutely incredible. So a couple things I want you to take heart of. Is it worth it to have an HSA? It depends. More than likely, yes. It can be worth it for tax advantages alone. The money you contribute to an HSA is tax-free, so you can lower your tax bill by routing money used for medical expenses through an account, and your employer won't withhold income tax. Another question I get asked is, what happens when I change employers? You actually keep the money, all of it when you change employers. So with an HSA provider, you can't have several HSAs and then decide later to roll them together. I've done that a few times, and that helps offset some costs. So in the end, let's wrap it up here. So we researched through some of these tools, which again, I'll link below. We've designed a health savings account dependent upon your age, the state you live in, how much you want to save, how much you want to withdraw, and what your potential cost could be with pre-existing conditions. We went over some of the do's and don'ts and what you can use your HSA for. So that's it for today. And remember to design your financial freedom. Bye-bye.